Hello and welcome to the Profitable Baker podcast, the show for bakers who mean business. I'm Annie Bennett, founder of the Home Baking Business Academy, and every week I'll be sharing practical lessons, mindset shifts, and inspiring stories from bakers who are building businesses they love. Because success in this industry isn't about who bakes the fanciest cakes, it's about who builds the strongest business foundations. Let's get started. Hello and welcome back to the Profitable Baker podcast. I'm Annie Bennett, and whether you're a long-time listener or you've just found us, I'm really glad you're here. Now, this episode is one I've wanted to record for a while because it keeps coming up time and again, not just in the Academy membership, but in conversations with home bakers at every stage of running their business. Today, we are talking about tax. Something I know a bit about as I'm a qualified bookkeeper. When I first set up my business over 10 years ago, I decided that I wanted to know about how to set up my books. And not doing anything by halves, I actually ended up qualifying as a bookkeeper. I did practice for a little while, but I don't anymore. But what it's left me with is an understanding of how the tax system and how the HMRC works. So today we're talking about tax, but specifically today we're talking about expenses. And even more specifically, the money that bakers are quietly and unknowingly leaving on the table every year because they haven't quite got to grips with what they're actually entitled to claim. Now, a quick clarification for this episode. It's mainly for bakers who operate as sole traders. If you've set up your business as a limited company, then my advice would always be to engage an accountant, and they will advise you on what you can and can't claim as expenses, because it's a little bit more complicated when you go into setting up a limited company. But for a sole trader, it's a lot easier. Now, how do you know if you're a sole trader? All that means is when you come to do your self-assessment, it's yourself you are registering. And then you report on any of your business activities. You don't register your business or your business name. The only time you use your business name during the assessment process is so that it can be referred back to. So when you come to the self-assessment forms, the forms will ask you about the business that the name of which you put in at the beginning of the process. And if you happen to have two businesses, which I did at one point when I was being a bookkeeper, I put in a name for each, and then they were able to refer back to one and then refer back to the other. That's the only time that they will talk about your business name. It doesn't go on a register or anything like that. So we are talking today about being a sole trader. Now, I want to reassure you straight away that this episode isn't going to be complicated. I'm not going to throw jargon at you or make you feel that like you need an accounting degree. That's not what I do. What I am going to do is ask you a few questions that might make you think differently about how you're approaching your business finances. And if by the end of this episode you're thinking, actually, I need to look at this a bit more carefully, then it's done exactly what I've wanted it to do. So let's get on with it. Let me start with something I see constantly in the home baking world. Many bakers spend hours getting their ingredient costs right. They know exactly how much butter costs. They track when prices go up at the supermarket. They can tell you precisely what the ingredients in their celebration cakes cost down to the last pence, which is what I teach. You need to know that. Knowing your ingredient costs is absolutely fundamental to running a profitable baking business. But then I might ask them about their other business costs, the overheads, and quite often it becomes very vague. Or, oh, I just add on a fiver for that. And that's where the problem starts, because when you're a sole trader running a home baking business, the amount of tax you pay isn't based on what you earn, it's based on your profit. Your profit is your income minus your allowable business expenses. So every legitimate business expense that you don't claim is essentially money that you're handing over to the HMRC that you don't have to. You've already spent it. It's gone out of your business. But if you don't record it and claim it, it doesn't reduce your tax bill. And that means you end up paying more tax than you legally need to. Now, I said I wasn't going to list every single expense that you might be able to claim because actually that would probably take hours. And we do that inside the academy. I do a whole training session. In fact, all of April is about finances in the academy. But I do want to, in this episode, shift how you think about your expenses because the issue for most bakers isn't that they don't know what a business expense is that they don't apply that thinking consistently in their own business. Let me give you an example. Most bakers would immediately think to claim the cost of their ingredients, obviously, because that's what you're selling. It's directly related to your product. Many would think to claim specialist equipment, a new cake stand, mixer, cake tins, decorating tools. That's obviously business related. But what about the smaller, less obvious things? The things that quietly accumulate throughout the year. The mileage when you drive to collect a special order or you deliver an order. What about the packaging you buy, the little stickers, the ribbons, the tissue paper? What about the monthly subscription to the platform used to take bookings or send invoices, or a subscription to a magazine about cake decorating? The insurance that you took out, the proportion of your phone bill that relates to business calls and business admin, and the broadband used to manage all that. What about the training courses? Any business books that you've bought? These are all things that, depending on your circumstances, could legitimately reduce your taxable profit. And yet I speak to bakers who've been running their business for years and never claimed half of these things, simply because it never occurred to them or because they weren't sure that they were allowed. I'm always telling my bakers that the membership fee is an allowable expense and that can be added on as well. But I'll tell them that in more detail in the sessions that we're having this month. So let's talk about what allowed actually means when you say an expense is allowed, because this is where a lot of confusion creeps in. The HMRC has a rule for what counts as an allowable business expense, and that rule is actually quite straightforward once you hear it. The phrase is that the expense has to be wholly and exclusively for the purpose of your business. Wholly and exclusively. These are the exact words the HMRC use. And what that means in practice is if you spent the money purely because of your business, not for any personal reason, not for any other purpose, then it's likely to be allowable. So if you buy a set of cake tins that you only use for your baking business orders, that's wholly and exclusively for your business. If you attend a cake decorating class specifically to develop a skill you're going to use in your business, then that's wholly and exclusively for your business. Now, where it gets slightly more nuanced, I love that word, nuanced, is when something has a dual purpose, meaning it's used for both business and personal. And the classic example is your mobile phone. Most of us use our phones for both personal and business purposes. Now, the HMRC's position on this is that you can't claim the whole bill as a business expense because it's not wholly for business, but you can claim a reasonable proportion that reflects your business use. So if you estimate that roughly 40% of your phone use is for your baking business, taking calls, managing social media, responding to messages, doing your admin, then claiming 40% of your phone bill as a business expense is a perfectly reasonable approach. You just need to be able to justify that proportion if you were ever asked. This is the only time that you estimate things rather than calculate it down to the last decimal point, because you can't calculate your phone use. The only way you can do that, if you're going to be really specific, is to track your phone use over, say, a week and see how much you use it. I know of people that have done that, but you can just estimate, have a think about during a day how much you use it when you pick it up. Is it for business? Is it for personal? And you can work it out that way. And the same logic applies to things like your home broadband, using a room in your home as workspace. It's all in the overheads. Now, in the academy, I have a whole training on how to work out your overheads specifically with only the minimal level of estimation. And you can use that overhead calculation not only in your pricing, but also to claim as an expense. Now, the point I want you to take from this is don't dismiss something as a personal expense just because it has a personal element. Think about whether there's a genuine business proportion. And if there is, that proportion may well be claimable. I also want to touch on something briefly because it sometimes causes confusion, and that's the trading allowance. You may have heard this mentioned. It's the £1,000 allowance that the HMRC gives sole traders, and it essentially means that if your gross income, that's your income that you earn before taking off any expenses, is £1,000 or less in a tax year, you don't need to report it or pay tax on it at all. But here's the part that's worth understanding. If your income is over 1,000 in that tax year, which for most of us running an actual baking business, particularly if you're established, it will be, you have a choice on your self-assessment tax return. You can either claim that £1,000 trading allowance as a flat deduction, or you can claim your actual business expenses, but you can't do both. So here's the question. What are your actual business expenses? If they come to more than 1,000, you're best off claiming them, putting in the total for your actual expenses. And you don't have to list them, by the way, on your self-assessment. You just have to give a figure. If they generally come to less than that 1,000, you can put in the £1,000 trading allowance. And this is exactly why knowing your expenses matters. If you haven't been tracking them properly throughout the year, you can't make that comparison. You're either guessing or you're defaulting to the flat allowance without knowing whether it's actually the better option for you. For many home bakers who are buying ingredients, packaging, equipment, and running various business subscriptions, actual expenses will comfortably exceed that 1,000. But you won't know that unless you've been recording things as you go. Another word about claiming expenses, you can only put things down as an expense that you can prove. So you would need proof of purchase, usually a receipt, because if you are audited by the HMRC, and this does happen occasionally, it's not very often for a small business, but it does happen occasionally, you will need to show proof of all the expenses that you've written down. So that is one reason why you need to be on it constantly. You buy something, you put the receipt somewhere safe, either if it's a hard copy, so you've gone into a shop and got a paper receipt, or you've bought something online and you've got an online receipt. Both are fine. Don't have to print all your online receipts out, just have them in a folder so that you know where they are if you need them. And another thing to mention that often gets bakers confused, we talk about claiming expenses, expenses that are wholly and exclusively, but the one expense that you cannot claim is your time. When we talk about pricing, we always have to include an element of our time in that product, so many hours at, at least £20 an hour, say, but you cannot claim that as an expense. If you have staff, you can claim the expense of their wages, but you cannot claim anything for your own time. Now, I want to talk about something that's probably at the root of everything, and it's not a lack of knowledge, it's not laziness, and it's not that bakers don't care about their finances. It's usually the timing of it all. Now, firstly, I want to make it clear that as a sole trader, you do not need to register your business for tax within 3 months of starting it. That's only if you set up as a limited company. For a sole trader, you register during the April after you first started trading. Now, if you'd like more on the timings and the deadlines, in my startup guide, there is also a guide for finances, which shows you the timeline of what you need to do when. And the link for that guide is in the show notes. Now, most home bakers, when they think about tax, they think about January, because that's when the self-assessment payment deadline is. And that's when the bill has to be paid. And that's when people suddenly go hunting through their bank statements, trying to piece together 12 months of business activity. January is a month when bookkeepers and accountants are flat out. And I always recommend to my members, to my bakers, that you try and get your self-assessments done as soon after April as you can. Don't leave it till January. Part of the reason for that is that if you do need to phone up the HMRC for anything and you phone them up in January, you are going to be waiting on that hold line for hours because everybody is doing it in January. So, but I completely understand why that happens. Running a baking business is busy. You're taking orders, you're baking, you're delivering, you're photographing your work, managing social media, doing all the bits and pieces. And the tax admin isn't the most exciting part of it all, is it? So it gets pushed to the back of the queue. But the problem with the January scramble is that when you're rushing through 12 months of records in a panic the night before a deadline, you miss things. You forget expenses that you genuinely incurred. You don't have the receipts for things that you didn't think to keep. You're making estimates rather than working from accurate figures. And the result is a tax return that doesn't reflect your actual business. And probably you're paying more tax than you need to. The good news is that there's a simple fix, and it doesn't require you to become a bookkeeper like I did. I never do anything by halves. All it requires is a bit of consistency throughout the year. Whether that's a simple spreadsheet that you update weekly, that's the system I have at the moment, or whether it's a folder, you might have a book. I do have a book for sale for income and expenses. I'll put the link in the show notes, where you just write everything down and you can pop your receipts in a folder as you get them. Or you might choose to set up a bookkeeping app. Off the top of my head, there's Xero and there's QuickBooks, but there's loads and loads more, which links to your bank account and categorizes your transactions automatically. The specific system matters less than the habit of doing it. Now, if you can get into the routine of recording your income and expenses regularly, even if it's just once a week, even if it's just 15 minutes, you'll arrive at the end of the tax year in a completely different position. You'll know your numbers, you'll be able to make informed decisions, and you won't be leaving money on the table because you simply forgot about it. Now, here's something I want to leave you with, and it's a reframe that I think is genuinely useful. Claiming your allowable expenses isn't a grey area. It isn't bending the rules. It isn't something to feel uncomfortable about. It's the system working exactly as it's supposed to. The HMRC doesn't expect you to pay tax on money you spent running your business. That's the whole point of an allowable expense. They exist because it would be completely unfair to tax you on your gross income. Remember, gross income is everything that you take in when you've had money to spend to generate that income. The law is explicitly designed to take those costs into account. So when you don't claim an expense, you are legitimately entitled to claim, not because you chose not to, but simply because you didn't know, or you weren't organised enough, or you weren't sure. You're not being cautious or sensible. You're just paying more tax than you need to. And for a home baker who's working hard to build a business, often alongside a job, lots of the bakers that I know have a full or part-time job as well, and have family commitments, and there's tight margins, every pound matters. So I'd really encourage you, wherever you are in your business right now, take a fresh look at how you track your expenses, not just the obvious ones, all of them. And if you're not sure whether something counts, the answer is to find out, not assume that it doesn't. Now, if this episode has made you feel like you want to get properly on top of this, the good news is that inside the Home Baking Business Academy membership, we have a full session in April dedicated to exactly this. I will go through all things record keeping in a really practical, straightforward way that's designed for home bakers specifically. Not generic business advice, but the actual expenses that are relevant to running a baking business from home. I'll talk about the systems that work in real busy baking life and how to approach your self-assessment with confidence rather than dread. April is our finance month inside the Academy, and there's a whole programme of sessions covering everything from expenses and record keeping right through to self-assessment step by step. If your business finances have been sitting in the I'll deal with it later pile, and we've all got one of those piles, haven't we? I've got a few I'll deal with it later piles. This is the month to change that. If you're interested in joining the Academy, love to have you in there. Details of how to join are in the show notes. And if you found this episode useful, I'd love it if you shared it with another home baker who you think might need to hear it. And if you have a question, follow me on my socials. I'll be doing lots of finance output this month. Please ask me there. And if you have a topic you'd like me to cover in a future episode of the Profitable Baker podcast, get in touch and I'll see what I can do. All the links for all of that will be in the show notes. Thank you so much for listening to this episode. Take care of yourselves, take care of your businesses, and I'll see you in the next episode.